Is silver on the verge of a massive collapse, or are we witnessing a temporary pause? Please watch the full video. Looking closely at the image _843 link to .png chart, the overall market structure is clearly bearish. We are currently seeing a consistent sequence of lower highs and lower lows, with the market currently in a significant retracement phase inside this dominant downtrend. Price is now pulling back directly into the primary supply zone located between 75.5 and 76.5. Our primary focus is on these key supply levels, while demand sits much lower at 73.5 to 74.5 and a major base at 69.0. Our directional mapping heavily favors the bearish scenario for today. A rejection from this current supply zone would signal a strong continuation of the downtrend. Our main entry will be in this order block zone. As price retraces here, we will start building our position carefully. For this specific trade, precision is absolutely everything. For this trade, our invalidation level will be just below the recent swing low. That is, if price breaks this level, our current bias will change immediately. If price manages a strong break above 76.5 and holds, we would look for a short-term bullish pullback instead. However, the preferred move is a rejection to the downside. Our final scenario or objective for this movement is to clear the liquidity zone above. This includes hitting scenario 1 at 74.5, scenario 2 at 72.5, and eventually scenario 3 at 70.0. For a sniper entry, watch for a liquidity sweep above 76 followed by a bearish break of structure on the 5-minute or 15-minute timeframe. Avoid buying at this level as it is directly against the major structure. Always follow proper risk management. See you in the next video. Follow for more, the next analysis is coming very soon.